We often get asked how to create your financial ratios that's coming out of your accounting system like Xero. Um, in Wink, we generally tend to not pre-make all the reports because our main benefit is to have very customized individual reports. But creating these are not that hard, and I'm going to go through that today just to show you how I do it. Now, I've set up my little demo organization in Xero, and I have synced this through to Wink. I've got Wikipedia open to show a few ratios. I think I might do one of the liquidity ratios and one of the profitability ones. But the same concepts apply to all of them. The formulas are just different, but I'll show you how to calculate these different values then that you can use to calculate them. Now, one thing just to understand is how Xero stores all these different types of, or how they classify the ledgers. We're going to be using the general ledger to grab all the values that's in a specific account and then use those to calculate all these formulas. Now in Xero, there's a few different account class types. There's assets and expenses, equity, liability, revenue, and within those there are different subtypes. So there's the class type and then the account type. And you can already see that if I was going to do current assets over current liabilities, I'm going to be after this one, which is all my current asset accounts and current liabilities. But similarly, you can see all these others are available. If you need inventory from a ratio, it will be in there. If you need work out your overheads, we'll be using revenue and sales as well. All these, it's just different filters that we apply and then use those in the formulas to calculate what we need. So let's get to it straight away. I'm going to design a new report, and I'm going to call this liquidity ratios. And I'm going to put this into a Xero ratios folder. And so as I said before, the best way to calculate all of these is to go straight to the invoice or the journal items rather data source. Trying to calculate this from all these different credit notes and purchases and transactions is impossible. But the journal items, this is not the manual journals. This is the general ledger, every single transaction that's happened inside Xero. So if I add that and start the report, then we should see our some sales that's happened. You can see GST, but you can see for every transaction, there was something went to accounts receivable and GST, your general double ledger entries. So I'm going to remove the description. We don't really need that. And then add these other two columns that I was talking about, account class and account type. And I might move them here to the front so we can see them. And you'll see this is exactly the same as what we just saw over here in the Xero types. By the way, this is in the Xero API documentation if you're looking for it. Now, we're going to be doing let's do the current ratio. So current assets over current liabilities. So we can already see that there's a current liability there and there's a current asset over there. But there's also revenue and things that we don't need. So let's go into our filters and say we want the account type to be any of current or current liability. And there we go. Now you can see we only have these two available to us at the moment. An interesting thing here might be to add something like a tracking category as well. Sometimes this could be quite useful. There's a few here in this demo account. I'll show you in a second. Now, to work out what our current liability or what our current assets are, you have to remember how the ledger system works. There will be positive values kind of written in all the time, and there'll be negative values subtracted as things are moved out again. So over time, there'll be a lot of entries that has happened. So the only way to get to what is the current value is we have to go back through your whole history and sum them all up to get to what it is now. For every bit that was put in, we got to add it. For every bit that's been taken out, we got to take it out. Now, that sounds like a lot of hard work, but it's not really. So the key thing is to remove the date range filter so that we get the whole history of every single transaction that's ever happened. And I'm going to remove the date. And it's a bit like a pivot table. I'm going to sum up the amount. So I'm changing this aggregation. And so for each individual account here, it will give me a total amount. So now you can see what it's done. It has given me a total. It has summed up everything that is that doesn't have a tracking number. It has summed up everything that has east side, north, and south. So in this way, you could actually create a ratio for each, say, division, or area, or client, or however you want to track it. I'm going to remove the account name and account code as well, so that we're purely just dealing with the liabilities versus the assets. So let's take that out. Account name and account code. There we go. Now it's kind of reduced. For each section, there's just a single value. You'll notice that the liabilities come through as negative values in Xero. Now, the next step is, how do we calculate this ratio? This is a bit tricky. It's not... you can't really say, hey, just do that divided by that, like you would in a spreadsheet. We kind of have to tell the system to what it needs to sum up in order to calculate it. Let's do a quick example. So the formula column, let's call this the overall. Let's call it overall. What are we calculating? Current ratio, yeah. Now, we have some formulas that can operate across multiple rows. So I could say here, hey, this is going to be the sum of, if I go sum of net amount, just to kind of show you what it does, and I've got to summarize this as well here, because we've summed up the net amount. This would have summed up all of these together. And so we see we got a net liability. So if I now say, okay, sum up everything that if the account type equals current, then give me that amount, otherwise make it blank. Then now you'll see that it is summed up all of these together. So that total would be 25,000. So if we go back to our ratio, we want to do the current assets, which we've calculated, and now just divide by the current liabilities. So we can do the same thing and say, so we've got that value, and we want to divide this by almost exactly the same thing, except where this is current liability. So this is kind of how you do it, right? So if you want to do these formulas from here, you create these little filters, and you can say, give me all of that minus this plus that divided by that. So similarly, give me this divided by this. And there we go. Now, the type detection isn't working that great because it's two currencies, so it thinks, oh, the result's a currency. But I can just change it to a number or percentage even. But generally the ratios we just want to view as a number as such. So this is the overall. This would be the total of everything there and the total of everything there. Also, we might want to just multiply this by -1 to get it positive, because these are all negative over there. Okay, now let's work out a specific one just for each site. What is our current ratio for this tracking category? So I'm going to add another formula column, and I'll call this East Side current ratio. Oops, did I spell that right? No, I didn't. East Side. And I'm just going to copy this formula we just used. And in this sum formula, you can actually limit stuff and say only, or rather I can say if the account type is current and the tracking one equals East Side. And I'll do the same for the second bit. Okay, let's see. Why is that not... I must have something wrong here. Tracking one equals... Oh, okay. Uppercase S. See, this happens to all of us. So it was not picking them up. And I've got to make sure that I'm summing the sums, if that makes sense. And there we go. So we can see East Side is doing really well compared to the overall business. So let me just save that so I don't lose it. Now, you can hide these columns if you're not after that necessarily, but my main goal is to use this in, put it on a dashboard for me. So we can go and say single Kpi values. I can say add the overall current ratio for me and the East Side current ratio. I just got to make sure it's trying to sum them all up for me. I just got to say, look, no, just give me the average value there. And so you'll see it's the 0.63 and 0.93. Just make sure these are nicely formatted. And there we have a little KPI box. Now you could do this, you could create a gauge. A gauge can't show multiple ones, you can just do one at a time. But if I save this and I have a little dashboard open, I can add my dashlet I just created to my dashboard. And there's my ratios getting displayed. Now, I was talking about the the profitability ratios, things that uses profit and net sales. They work a bit differently because, as I said, in assets, you have to sum everything up across all time, whereas for the profitability ones, we keep the date range in there because we want to be able to just say, hey, what was the profit for this year or this quarter or something like that. So I'll just show you quickly how to do that. Let's create a new report. I'll put this in there. And again, we use the journal items. We have that for QuickBooks as well. And this time I keep the journal available over there, the date range. So I might maybe just quickly run this and run it for a bit of a longer period, so we have a bit more data to play with. So let's say, I can actually say let's do it for the last 24 months. And then go back into the designer. And this time, I think we'll want to see expenses. Not necessarily. We want to see, we might use these class types and just get everything that's a revenue or expense, right? So let's do that first. We'll say account class equals revenue or expense. And that brings up a whole bunch for us. If I add those two columns, account class, account type, I don't really need the description. But we can see here there's a bunch of expenses, other income, direct costs, so this would be your cost of goods, other income. So we can do the same thing that we did before, right? We go and say account, let's remove the date, so we don't really care about that, and just sum this up for each unique account type. So that's it. For the last 24 months, our direct costs were these, our expenses were these, and this was our revenue. So revenue comes in as a as a negative value through just a negative in the journal. So you can easily, once you do your calculations, you can just multiply it, by -1 again. So let's do a quick formula. So this one, I'll say this is going to be our profit percentage. I'm just going to make something up here. I'm going to say again, sum up all the revenue. So I'm just going to say sum up all the revenue. If account type equals revenue, then net amount. I might actually say, because the revenue here, I might say this is -1 times the net amount. And make sure we sum this up. So you'll see now, okay, this is the same as the revenue. And let's say let's just go with the gross profit, I think. Let's do that. So we're going to do that and subtract what was the direct costs, right? So that would be this minus that. You can see that looks about right. And we want to divide it by the whole revenue again. So back in here, let's put all these in brackets and divide it by just the total revenue again. And make sure it's a number. And so there we go. That's pretty healthy. Actually, if I want to say this is a percentage, then there we go. That's really nice. But we only spent $700 or $800 to generate 58,000. So again, the same deal. We can create a dashlet and then just add it to our dashboard. I think that's it. That should get you started. If you have any questions, please just contact support and we'll help you through it. Thanks for watching and talk to you next time. Bye-bye.